Okay, so next section we have here is employer taxes. Okay, so as a responsibility for a company, you also have to pay not only a portion to the earnings to an employee, you are also going to also be responsible to pay in any other taxes that are required by the law, whether it's federal or state, for having employees. So the first one you're going to have to do is if you have those types of employees, you are responsible to also pitch in to their FICA, right? That means if they put in money into their Social Security and Medicare, you as a company is also responsible to match them 100%. So again, we talked about how company FICA works is if they put in X amount of dollars in there, you have to match them. So in this case, for the example here, it's going to be based on, again, every individual person, because every individual person has their different earnings, right? So if L earns that 800 and or $686.25, that's what's going to be based off of. So that means every individual that you are calculating for their payroll for the employees and their check, you also have to make sure that you also cover their portion for having that individual person as an employee. So that means you are also responsible to cover in the federal income tax. Now again, usually you can either have them separate, right? One for Social Security, one for Medicare, or you can just simply combine them. But if it's easier to just go ahead and recognize that they have Social Security and Medicare, then you could just match them 100%, right? So in this case, FICA is going to be a company responsibility for contributing to that individual's Social Security and Medicare as well. Okay, and again, it's based off of their gross earnings. Okay, so again, if L decides to earn $686.25, because for the Social Security, we've already calculated was $42.55, and the Medicare was $9.95. Therefore, the total company FICA that we have to contribute is $52.50, right? You just combine the two, and that's company FICA. Okay. Other employer responsibilities are you have to pay into federal unemployment and state unemployment, okay? Because this is a federal act here where you are having to be responsible for if in case an employee loses their job for temporarily or anything like that, they can be able to apply for federal unemployment. So again, they want to so in this case, it really depends on the type of business that you are, how much tax money that you owe, because that's ultimately going to determine your tax rate. Okay, so the tax rate could be anywhere from 0.5%, or 0.5, so 50%, or half of percent, or it can go up to 6%. Okay, now again, for this, it's going to be based on how big the company is. So for example, if you're a small company, you're going to be in the very low percentages just because you don't have that many employees to have to cover for the unemployment tax, meaning you don't have a higher bracket or a higher rate because you have less employees that you are going to need to cover. But if you have more employees or more liabilities, meaning you owe more money to the government, then that will be definitely a higher percentage. Now for this class, I'm just going to keep it sweet and simple, and I'm just going to have you just know federal unemployment as 6%. Okay? And you file this through the 940, okay, for FUTA tax. Okay? All right, and there is no cap limit for FUTA. All right, but just know that if you do less than for a certain amount of money that you've earned, it's every $7,000. But in this case, we're looking at a grander scale where we have more employees. Okay. And then the state unemployment tax. So again, depending on what state that you are doing your business in, is going to have their own specifications and requirements, right? In this case, the state can collect up to $36,600 for state unemployment. Again, this number can be subjective for every year. For this one, this is the 2022 version, okay? that it is up to $36,600, and of course, your rate can range between 25 or a fourth of a percent up to 5.4%. Okay, so again, now they do say this: new businesses are subjected to be immediately at 3%. So again, this is also based on how big the company is and so on and so forth. But most new businesses is going to be straight away at a 3% rate. So in this case, very easy. Here I'm only going to use the 3% because we're going to assume our businesses that when we are starting to calculate is going to be new, fairly new. So for this class, FUTA is going to be 6%. SUTA is going to be 3%. Now, of course, depending on the state that you are in as well, they have different names for the unemployment. So you can also be referred to state unemployment insurance, SUI, SUI. But in this case, the general idea, it's a state unemployment tax. Okay? All right? So you have federal and state unemployment. Other things that you are going to be obligated to have to pay into is going to be things that are required by the state. So workers' compensation is a requirement on the state. Now, this is going to be based on how labor intensive your job is. So for instance, if you are a contracting construction worker type of company, your workers' compensation rate is going to be very high because you have a likelihood of getting injured on the job. Now, what workers' compensation does is it's a protection plan that businesses go through to protect themselves from employees from suing the company for negligence, okay? So again, when an employee is working on site or when an employee is working in terms of the hour, the employer is responsible for every action and every consequence that the person is on. So again, you're liable for their task and their duties because they're on your time. Okay, so that's why it's a protection plan and it's required. In the state of Nevada, it is required that you do have a workers' compensation plan for that instance because again, here in Vegas, it's a very high risk because we have a lot of buildings being built and things like that. So again, depending on the job. Now, if you're just doing a local like coffee shop, right, the most that you'll get is a 3rd-degree burn from, maybe handling hot coffee or something like that. So again, your rate can be significantly low depending on the labor intensity of the job. So in this case, for this class, we're just going to keep it at a sweet 1.36%. Okay. Other things that are going to be contributing factors to paychecks or things like that or payroll taxes would be anything such as if you earn extra money, that's going to be extra things. Again, holiday pay, bonuses, commissions, and things like that, fringe benefits, and meals and lodging. Okay, those are things that are going to be either for or against your paycheck, and it can also be taxable. Okay, but in this case, we're just keeping it real simple, sweet and simple, that these are not the responsibilities that we're going to be putting in. We're going to pretend that L doesn't get any benefits, any deductions, or anything extra from our company, and only is strictly needing to meet the federal requirements. So that means we are only going to pay for the federal and the state obligations. So in this case, right, the only thing that we have here is federal, the FICA, which is the Federal Insurance Contribution Act, which is a requirement for L. So again, we've already calculated that as $52.50. FUTA, which is going to be 6% of gross pay. So therefore, that's $41.18. And then we're going to do SUTA, which is we already stated as 3%, okay, which is $20.59. And of course, workers' compensation, which is also based on gross earnings, because we stated that's going to be 1.36%. We went ahead and calculated that to be $9.33. Okay. So in this case, these are payroll tax expenses that the company is responsible for having L as an employee, and that means each employee is going to be calculated with a different amount of employer company taxes. So again, we just spent the last 15 minutes calculating just that one person's paycheck. Then we have to calculate the company's responsibility for having that person work. Multiply it by the 20 employees that you have. You get the picture, right? Payroll is a whole can of worms itself. It's very labor intensive. So that's why what we typically do is we would outsource it or pay somebody else to do it. Okay? Because of how much you need to know what taxes are available. You do want to also seek a professional tax accountant for this, just because you want to be very careful, because you don't want to accidentally overpay the federal government or underpay the federal government or state, whatever it is, right? Because you don't want to get penalized for that. All right. So again, this is what you're going to do. You have your payroll tax expenses for FICA, FUTA, SUTA, and workers' compensation, gathering a grand total of $123.60. So not only do you have to pay L $686, you also have to pay a responsibility for having L for $123. So right there, L right there has already, claimed about $900 or $800 for just being an employee for just 1 week. Okay? And imagine what are the possibilities when you also include retirement benefits plans and Medicare plans and life insurance and all of that, right? It's definitely going to be very costly to have employees. All right. Now, last section here is going to be, how do I submit my federal taxes and how do I pay them? So again, the forms that I talked about was the 940, the 941. Those are your federal taxes. State's going to be dependent on your state if you do or do not have state taxes. So again, whatever forms that the state requires. We're not going to talk about that because we are in the state of Nevada. So in this case, we don't really need to pay state taxes here. So we're focusing more on the more obligated ones, such as the 940 and the 941. So there's also 943. And of course, you also have to process your W-2 forms for your employees, right? Because when you submit your W-2 forms from earlier in when you stated that you have your employees, when you prepare for your taxes, the state the state and federal will give you the W-2 forms to give your employees, to give them a record of how much you made payments to them and how much federal taxes you paid throughout the whole year, and then they can use that to file for their personal taxes. So again, it's important you know, W-2, we as an employee or employer submit to the state, okay, and the employee submits the W-4 form to the employer, and then at the end of the year, the employer gives them back their records of the W-2 form to file for their taxes. So again, lots of confusing forms here. But again, the 940 and 941 forms states that it's every January 31st, you are subjected to pay your federal taxes. Again, you would pay at the end of the year like every normal tax year, right? So that means you're making sure that your numbers match, that you made all the federal payments on time and you paid off all of that. If not, you can be penalized if it's late. If you owe money and you don't pay it back, you can be penalized for that as well. But you do need to know that you do absolutely 100 need to seek a professional tax accountant to help you process these forms for you. So when you do file for taxes, everything goes through pretty smoothly. Okay. All right, chapter review. So we talked about what types of employees are there, right? So we said that 2 of them are going to be on the payroll while the rest are expenses. All right, then we talked about the different forms that you are required to know. So again, the SS4 form, the W-2 form, W-4 form, the 1099 form if you are another employee, and of course the 940 and 941. Okay. You also need to know what the taxes that are required. So, for example, for the employee taxes, you have the federal income tax withholdings. You have FICA, which is going to be your Federal Insurance Contribution Act, so Social Security, Medicare. And the employer's taxes is going to be FICA, FUTA, SUTA, and workers' compensation. So again, here's the little boxes that you need to know as a reference point of what they are. So again, FUTA, we said, is going to be 6%, okay? SUTA is going to be 3%. Workers' compensation is 1.36%. There is a cap limit for SUTA. It's at $36,600, like we've already mentioned. For federal income tax, it's going to be based on the percentage method, based on the Circular E table, which we already took a look at, that you can find at irs.gov. FICA is going to be Social Security, which is 6.2%. And there is a cap limit to that for $147,000 limit, while your Medicare is 1.45%, and there is no limit. And last but not least, if you'd like to know more information about payroll and federal taxes, state federal taxes, and the different types of employees, be sure to check it out at irs.gov, publication 15. Okay? So that concludes this here, right? This is just a revamp to remember how to calculate the federal income tax withholdings. And these are the 2 journal entries that you need to know. When you're processing one individual's person's paycheck, you need to do the first section, which is figuring out the employee's paycheck. So that means determining how much money did they earn, what are the taxes that the employee is responsible for, and how much are you going to be running the check out for. Then you need to calculate what your responsibility is as an employer for the taxes for having that individual employee work for you. Okay? All right. So let's go ahead and dive right into the Chapter 12 payroll exercises. Okay? So, employee, for this example, Bob is a married man with 3 dependents. Okay? And he files as head of household. Okay? And only has one primary job. He earns $19.50 per hour, and he worked a total of 72 hours this pay period. Okay? And the payroll period is bi-weekly. That means he's going to get paid every 2 weeks. Okay? And of course, we're going to be using the table down below to answer the question. So here you are provided the table number 6, which will give you your payroll payment information. So again, if he's on a monthly paycheck, he gets 12 paychecks. Okay, so on and so forth. Bi-weekly, so he's going to get 26 paychecks. Okay. So let's go ahead and go here. So here's the bi-weekly table for head of household. So again, let's first go ahead and determine. First things first is Bob's federal income tax withholding. So step 1. Step 1 is to determine how much gross pay Bob earns. Okay? So in this case, he earns $19.50 and work a total of 72 hours. So right here, we got $19.50 times 72 hours, giving us a grand total of
$1,404.
$1,404. Okay. Okay. Now, of course, we said that he has one primary job, so that means he has no any extra income. All right, and it looks here that nothing else, he doesn't have any other deductions. So in this case, right, step 2 was to add any, right? So in this case, we're going to start with the gross pay, right? We're going to add any extra income and subtract any extra deductions. So in this case, the total amount that he's taxable is going to be for the $1,404. Okay? So step 3, we need to determine what section in the table we are going to be calculating for his federal income tax. So in this case, how we read the table: A, has he earned more than $0? Yes. Has he earned more than $746? Yes. Has he earned more than $1,310? Yes. But definitely not more than $2,896. So in this case, he's going to fall under this line right here. So I'm going to highlight that so you know. Okay? So he's definitely earned more than $1,310, right? Because right now we're at $1,404. He's definitely earned more than $1,310, but he's earned less than $2,896. That means he's subjected to $56.40 of tax regardless of what he's earned. Any dollar in excess is going to be subjected to 12%, and he gets to keep $1,310. Okay? So let's go ahead and calculate his extra earnings. Okay? So in this case, he's earned a total of $1,404, and the government's going to let him keep $1,310. So therefore, he has earned in excess a total of $94. Okay? Now, with that $94, right, he's going to be subjected to a 12% tax. So that means 12% tax. So what is 12% of $94? It's going to be $11.28. Okay? Is how much in excess that he's going to be charged or taxed, right? So in this case, the last step we have here for step 3 is to add the amount that he's going to get taxed anyway, okay, from the government. So in this case, $56.40. So right now, his taxable earning or his federal income tax withholding is currently at $67.68. Okay? Then step 4 is to deduct any claims that he's made. So in this case, he has a total of 3 dependents. Okay? So in this case, he has a total of 3 dependents, and he's going to claim all 3 of them. Now, if you remember on the W-4 form, it cost $2,000 per dependent. So therefore, that's a total of $6,000, right? But we need to divide it amongst the total paychecks that he's earned. Since he's on a bi-weekly payroll, he's going to earn 26 paychecks, okay? So therefore, if I divide 6,000 by 26 paychecks, that means I need to subtract a total of 156. Oh, whoa, wrong number. Let me try that again. So 6,000 divided by 26 paychecks, he's going to be subjected to a total of $230.77 for withholding. That means we as a company need to withhold this amount from his paycheck. Now, here's the rule that it says in the form. If for the value that he's being subjected to, which is the $67.68, and you're going to state the claim of that $230.77, if the value falls below 0, you're going to claim it as 0. So in this case, this definitely gives me a negative amount, right? It becomes negative. It becomes negative $163, right? And 8 cents. Or, yeah, 8 cents. No. 9 cents. Okay? If that's the case, that means this means that he's claiming more than what we can provide him, or he's claiming more than what the check can provide, right? So in this case, we're just going to assume it's going to be 0 because it's negative. You can't pay your employee more than what they've earned. So in this case, the assumption is if it falls below 0, or if it's a negative number, you're going to say that you're going to claim 0 withholdings and let Bob keep every penny from his paycheck, okay, for federal income tax. Okay, so that's the first one here is he's at 0. Okay. Next thing we're going to do here is we are going to solve for Bob's FICA taxes, which is Social Security and Medicare. So Social Security, right? We know it to be a total of 6.22%, right, of gross earnings. So if Bob earned $1,404, we need to calculate what that is, what 6.2% of that is. Okay? So in this case, let's go ahead and calculate that. 1,404 times 0.062. His total Social Security that he's going to be putting in is $87.05. Okay? $87.05. Okay? His Medicare is going to be 0.145% of gross earnings. So in this case, 1,404 times 0.145% is going to be, he's going to put $20.36 to his Medicare. Okay? So now that we figured out all of those federal calculations, we now need to know how much we need to cut a check for Bob. So in this case, we need to identify that he has some salaries and wages expense for the total of $1,404, right? That's how much he earned. His federal income tax withholding, okay, right? We already calculated that to be $0. Okay, so that means you wouldn't list it out here, but in this case, for this example, we'll list it out. Okay, he was subjected to Social Security, right, for a total of $87.05. And he is also subjected to Medicare, okay, for $20.36. So therefore, how much are we going to be writing out and cutting a check for Bob for his paycheck? Okay? So in this case, we need to figure out what 1,404 minus 8705 is, minus $20.36 to get a grand total of, he's going to walk away with $12.96.59. Okay? That is his total check that we're going to be issuing to Bob. Okay? All right? So that is looking at the employee standpoint. Now that we covered in the employee, we need to now cover the employer. So in this case, right, we need to figure out what the Social Security and Medicare is based on Bob's earnings. So if you already know the calculation, right, it's the 1404 times the 0.765%, okay, also known as the Social Security, which we've already solved from above. Social Security was $87.05 plus the Medicare of $20.36. So therefore, total company FICA is going to be, so 87.05 plus 20.36 is going to be equal to 107.41. Okay? That is how much company FICA we are responsible for. Okay? Federal unemployment tax based off of Bob's earnings, right, is going to be, right, 1404 is what he earned, and for this class we said it was 6%. So in this case, 6% of his paycheck, we are subjected to have to pay $84.24 for federal unemployment. Okay? For state unemployment, we are looking at based off of Bob's gross earnings, which we claim to be 3%, right? So 3% of that is going to give us $42.12. Okay? Last thing that we need to put in here is going to be Bob's workers' compensation. Okay, based on Bob's earnings, so in this case, workers' compensation, right? We said for this class is going to be 1.36%. So we get a total of $19.09. Okay. So now, once again, these are the payroll tax expenses that the company is responsible to pay for, which is going to include company FICA, okay, for a total of that 107.41. Okay. We also have to pay into FUTA, which is what is it, $84.24. And we have SUTA, which was 3% of that, which was $42.12. And then last but not least, we have workers' compensation, for a total of $19.09. Okay? Giving me a grand total payroll tax expense to be a total of $252.86. Okay? And that is how much extra money we have to pay on top of the $1,400 that we have to pay for Bob. Okay? So in this case, he's already looking at $1,600 just for the 2 weeks of working for us. Okay? $1,600. Okay? All right? So, are you able to do the next one? The last one here. Employee, right? We got Susan, who's a single woman with 0 withholdings and has 1 primary job, okay? She earns $25 per hour and she worked a total of 38 hours this week. The payroll period is weekly. So once again, here's the weekly table for a single person. So let's go ahead and figure out question 8 is, what is Susan's federal income tax withholdings? Okay, so first one's first is, how much does Susan, what is Susan's gross earnings? So she earns $25 an hour for 38 hours. $25 times 38. Okay. So how much is Susan's gross earnings?
$950.
$950. She doesn't have any, she doesn't have an extra job. So that's going to add 0 to this and doesn't claim any other extra deductions. So that means her total taxable amount is $950. So let's take a look at the table. Okay. Which bracket or which line is she going to be falling into? Okay.
Third line.
Third line, right? She's definitely earned more than $447. However, she's definitely earned less than $1,052, right? So therefore, let's go ahead and read this table. So she's going to be subjected to $19.80 at a 12% tax rate at $447. So how do I determine the total total amount in excess that she's earned? How much money has she earned in excess?
Would be 447.
447 is what the government let her keep without taxing it.
Oh. So an excess, so it would be 503.
Correct. So we're going to subtract the 447 that the government lets her keep, meaning she's earned a total of $503 in excess. So that means, what does that mean? So if she's earned $503 in excess, that means she's going to be taxed at how much percent?
12%.
12%. So we need to figure out what 12% off of that $503 is.
And that gives you $60.36.
$60.36. Good. Okay. Now, that is just based off of her amount of earnings in excess. What do we do with that $19.80?
We add it.
So in this case, what is her grand total amount to be withheld? What was that?
8016.
8016. 8016. Okay, good. Okay, 8016. All right. So then now we need to calculate for Susan's FICA. So Social Security, what percentage are we going to be using? For Social Security.
6.2.
6.2, good. Off of her earnings, which is $950. So in this case, how much Social Security is she going to be paying into?
58.90.
58.90, good. Okay. What about Medicare? What percentage do we use?
1.45.
Correct. So in this case, how much money she's going to put into her Social Security? To her Medicare.
She'll do 13.78.
$13.78. Good. Okay. So, answer this question here. How much are we going to pay her? Okay, so what's the first thing we're going to recognize?
Her salary and wages.
Good. Salaries and wages expense. Okay, for a total of, how much did what was the gross earnings?
950.
950. Good. So first thing that we have to take away from her paycheck is the federal income tax withholdings. Okay, for how much?
8016.
Yes, 8016. Oh, wait, hold on. Federal. Yes, 8016. Good. Okay. Next is going to be Social Security. How much Social Security did she put in?
That was 58.90.
Okay. And then last but not least, or second to last, how much Medicare did she put in?
13.78.
13.78. So in grand total, how much is her check?
797.16.
What was that? 7.
97.16.
Okay. There you go. So she's earned a total of $950, and yet she has to pay a total of $100 and almost $200. No, 200 in
150.
taxes. Yep. All right. So now we need to figure out what our company responsibility is to pay into Susan for having her as an employee. So the first thing is company FICA. So what is company FICA consistent of?
Social Security, Medicare.
So in this case, we already calculated it from above. So Social Security is $58.90 and Medicare is $13.78. $58.90 plus Medicare was $13.78. So therefore, grand total company FICA is
72.28.
72.28. Okay. So then now we need to figure out what her federal unemployment is going to be based off of her gross earnings. So what did we say for this class we're going to use? What percent?
6%.
6%. So what is 6% of 950?
$57.
$57. Okay. What about state unemployment?
3%?
Yes, we're going to use 3%. So what is 3% of 950?
20. It's 2850.
All right, sorry. Get 2850. Good. And then last but not least, workers' compensation. What percentage did we say we would use for this class?
It's 1.36.
Mm-hmm. So what is 1.36% of
1292.
1292? Right? So in this case, how do we compile the total amount of company payroll taxes? So in this case, payroll tax expense. Right? We have company FICA for a total of 72.28. How much was FUTA? We said $57. SUTA, which we said was half of FUTA for $28.50. And last but not least, how much workers' comp? We said it was $12.92. So in grand total, how much taxes does the company need to pay to have Susan as an employee?
It's 170.70.
170.70. Okay, 170.70. Good. All right. And that concludes today's lesson for payroll. Any questions?